Joining us now to discuss former Continental Airlines CEO and CNBC contributor Gordon Bethune and Raymond James airline analyst Savi Syth. Good morning to you both. Savi, just interested in how the stocks, which are 30% off their highs as a group, they trade, Delta and United trade at 4 to 6 times earnings. Market seems to be saying the good times can't last, at least in terms of profitability. What's your view on that?
I agree. I mean, that's definitely what the markets are saying. I disagree with the markets in that you have seen some fare weakness in the off peaks, but demand in the peaks have been really strong. And the airlines are moving quickly, as quickly as schedules allow, to adjust for those off peak periods. So I do think while it's not going to be maybe as strong in the transatlantic next year as this year, I think things are going to hold up better than the market appreciates.
Gordon, you know the old story, which is, that as a group, airlines have a hard time not adding capacity, not chasing volume once things slow down at all. You're starting to see some softening of price, as Savi was saying, in some areas. How do you think the industry is going to navigate this?
I think, on an overall basis, they're in a good position. They're starting to adjust, non-fare revenue to increase their margins. But they've got a lot of labor cost pressure on them now, which is going to be the real challenge for next year's earnings. But I generally agree that it's a positive growth scenario, but not extraordinary.
Gordon, how do you turn a good industry or a good operator and a good management team into a good stock? Because that always appears to be the problem here.
Well, people don't always read the tarot cards correctly either. And I think the management in the airline today is as strong as I've ever seen. So they're not a bunch of people chasing their own tail and attacking each other. They're staying focused on incremental revenue, which instead of day-night differences, just small margin increases with Wi-Fi fees and change fees coming back as they were before COVID. But overall, getting out of the 2020 hole, they're out of the hole now, and I think they're going to stay.
Savi, you mentioned the pressure on pricing in off-peak times and off-peak, I guess, routes, with not being compatible with current fuel cost levels. Now, it seems as if, obviously, the pressure has come off to some degree on fuel, but how is that playing out? What do you see that leading to next year?
Yeah, the fuel is still 50% above 2019, so it's a much better scenario than what you saw last year, but it's still a lot of pressure. And look, I think you saw some airlines this year in the third quarter not making money in this environment. So you are going to see airlines adjust capacity to address that, because the levels of fare that you're seeing in the off peaks is just not sustainable, and you're going to see it in capacity adjustments next year.
And which airlines, Savi, are you think better positioned or at least more attractively valued in this environment?
Yeah, our picks is still, in this environment, Alaska and Delta, they have strong balance sheets to withstand any kind of slowdowns or shocks. And we think kind of doing the right things and earnings heading in the right direction.
I know, Gordon, you're looking at the election, the pending election, potentially for a driver of the economy or fiscal policy. I know it's not necessarily airline specific, but what do you expect?
Well, a lot of pressure there because, what the economy does is pretty much what the airlines are going to do. But once they get behind, as they did over the 2020 COVID, it's hard to catch up. So they're still adjusting on what the new day is here in America, or the international flights are showing some real growth. But the political issue is capital spending, and you're not just going to see capital spending in an uncertain environment. So we got to get behind the election to see where we are.